Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Tuesday the 22nd of October. A little bit of a mixed sentiment that has sort of taken hold really into the European session. There was a couple of hours ago when I first started looking at markets early today, we saw a mild risk positive move coming through. That sort of dissipated somewhat. We saw S&P 500 futures which were sort of 0.2% higher. That sort of slipped now about 0.1% lower, and we've just seen this turnaround through FX markets. We had sterling which was higher, euro which was higher, the yen which was underperforming, and that's sort of now flipped on ahead a little bit as the European session has taken hold. We had yesterday pretty positive comments from Larry Kudlow, the White House advisor, with regards to the trade dispute, and he was talking about the fact that the December tariff implementation could be cancelled if there was progress through the trade talks. So that was tended to be seen as a positive move, and we saw a decent run higher on Wall Street last night. But that move has just dissipated into this session, although nothing really decisive has taken hold. And we've seen that Treasury yields were moving higher, but then it's now trading around the day lows on the 10-year and the 2-year. So just a little bit of a stalling in that risk positive move that we had seen. Interesting that it was just a little bit higher on those VIX volatility. So again, the suggestion that markets are a little bit less risk positive than they certainly had been early this morning. So we've got that in place. Now, in terms of what's going on today, there's just the continuation of this Brexit saga in the UK Parliament. The move to try and implement the withdrawal agreement bill that Boris Johnson's government is trying to put forward begins in earnest today, and there's going to be a series of votes this evening which could drive whether the UK government are able to sort of bulldoze this deal through Parliament in the coming days, and so that the UK could leave before the 31st of October without the need for an extension. So that's going to be, we're going to see whether that is possible tonight. So there's a lot of volatility that we could see on sterling tonight. But generally speaking, markets, a little bit of a damp squib at the moment. In terms of data points, we've got the UK borrowing numbers for September at 9:30, expected to be £8.8 billion in the as a deficit, and that would be that'd be a lot more than they were last year. I think around £2 billion last year for this month of September. So that would be a quite considerable worsening there. In terms of US data, we're into the afternoon really. We've got the existing home sales expected to see a slight decline, 0.7% back to 5.45 million. Richmond Fed's going to be interesting. Richmond Fed composite is at 3 o'clock. That's expected to be -9. -7 back from -9. Is the expectation there, so that could have an impact on the US dollar this afternoon as well. Okay, so that takes me to my chart of the day, which is silver. And I was looking at silver yesterday and started to see this market just starting to creep higher, and that I thought was interesting because it does really reflect that obviously we've seen gold price, which is trading with a mild negative drift. Silver seems to be trading with a mild positive drift, and we can see that through the fact that silver's broken that downtrend, is starting to pull more of a positive move through momentum indicators. Stochastics rising in above 50 for multi-week highs. Silver yesterday poked its head above 1775, which is a bit of a pivot line over recent weeks. Couldn't hold that move into the close, but it's starting to, as you can see on the hourly chart, there's a move whereby the hourly RSI is holding above 40, moving towards 70. MACD lines on the hourly holding broadly above neutral and staying positive as well. So if the market can hold above that 1770, move above initially, but then hold a break above the 1775 level, that would be a multi-week high. Obviously that would be your near-term test, but then 1795 would be your intraday resistance from October. So they are a couple of levels that you need to look out for. At the moment, silver is still stuck in this sideways move, but it has started to show signs of a mild improvement that I think is interesting, because it's broken that downtrend. You're starting to see more of a basis of a turnaround in momentum indicators as well. So RSI holding above 50 would help that as well, as are the stochastics holding above 50 and holding that break the downtrend. Next test 1775 on a closing basis, 1795 on an intraday basis would be the resistance levels. So not a sustained improvement yet, but early signs to watch out for. So I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars.